Hello and good morning, ladies and gentlemen. Good to be with you. Give me a quick yes if you hear me. We can get going. Perfect. All right. Welcome to the Hurley Investments Trade Findings and Adjustments of December 1st, 2022. Kind of a crazy couple of days since the Monday that we spoke. Let's see, what was Monday? Today is Thursday, Wednesday, Tuesday. Monday was this nice big down day. And we've had a ridiculous run back up and back above the 200-day, at least for the time being. Like probably the first time this year since it's gone below the 200-day moving average. All right, so we'll get on into that. Last time, let's see. Last time we spoke in trade findings, talked about how we added more protection back on as the Fed Bullard came out and said that recent inflation numbers, speaking of the recent inflation numbers coming in lower than expected, he said they weren't enough to slow down rate hikes. Bullard is typically more hawkish, meaning more aggressive, wanting to raise rates, etc. Typical economic jargon. Dovish means want an easy money policy. That's how Powell has been for quite a while until he's turned around, end of last year and starting to raise rates to get inflation under control. The market is still worried about the economy going into recession. Big companies are laying off employees, but to some degree, that is kind of what the Fed wants to see. They want us not necessarily huge layoffs, but a slowing of job openings. They keep talking about this thing called a soft landing, which if that's something you've heard, all they're talking about is the Fed is hoping that they aren't raising rates too fast, too much, to slow the economy down too much where it would put us into a recession. Ironically, technically, as we've talked about, we already are in a recession. So it's kind of funny that they say that. But what happened? Why did we get this ridiculous up day yesterday? We had Fed Powell, who did a bunch of interviews and came out and said some things. He came out and said we could get a slowing down of rate hikes, meaning smaller rate hikes as soon as December. So that comment alone was enough, pretty much, to send our market like 3% higher yesterday. Actually, I'm just going to add to this for now. I'm going to take this off. Trying to get my bullet points set here. There we go. So Monday, let's look at a SPY chart, because that tells you a little bit closer what we've done with our SPYs. Monday, market started coming down and we got 395 puts on, and we already had 390 puts. Boy, we've just guessed the most wonderful times to be adding protection with those SPYs, haven't we? But we had added those on. Both sets, so that we'd have more protection as it hit this 200-day moving average, which has been pretty reliable in as a strong resistance level, and was looking good for that day, looking good for Tuesday, and then during the day, before around 11:30 Mountain Standard Time, which was like 1:30 Eastern, when Powell came out and did his interview, it was looking pretty good. So I was glad we had protection on for that moment. And then, of course, as things started to come out, it reversed quickly and kind of stayed around the 395 area. And I was patient to not, I didn't want to just rip stuff off and be stupid, just because it can easily reverse with any other things that he might say. And so it traded around there, and then it started to look like the market was not only holding up but continuing to inch higher. So I got those protections off, saved some of the premium there before it started to head back above the 200-day and higher. At the same time as taking some of this, taking all of those SPY puts off, I took puts off of, let me just get some notes on. Part of the reason I tried to be patient and not just trigger happy when he said that was because we kind of already knew that this was a possibility. It wasn't necessarily new, but we also had job openings numbers, and he liked that the job openings were slowing down. And so that was a different reason, I guess, as well. So we also took off Apple, Baidu, Meta, what else? Let me think. Boeing. Put Boeing right here, alphabetical order here. Boeing, Under Armour we had taken off Tuesday because it was already heading up and is now up above by 1 cent, up above $10. Under Armour is one we've added shares to in the last couple weeks after they had some good earnings, positive earnings. So that one looks awesome, and that's kind of continuing to go. But these are the ones I took protection off of yesterday. Apple and Meta. The tech stocks gotten beaten up, and tech stocks were really starting to take off yesterday. So I felt that was a reasonable one to take puts off of, and man, was that a great idea. So it came up above the 50-day there on Apple. Of course, everything's kind of being maybe a little bit of profit taking, which typically happens a day or two or some days after a big jump like we had yesterday. But seems as though everything, including the market, is holding that 200-day moving average. For Apple, it's the 50-day moving average. And I got puts off around 144-ish. And we had 148 puts. So we got most of our premium back that we had. We had some time decay where that premium kind of shrunk a little bit. So we didn't get a profit, but we only lost a couple cents there. And, you know, gained a few dollars in the stock. Meta, kind of a similar deal. Didn't quite get up to the 50-day, but I just felt that the 113 puts we had were better to take off and see if we can get above the 50-day with this, you know, quote unquote good news and protect at a higher price. That was what my thoughts were there. Boeing was inching just above this top that it's made. Hasn't gotten quite above it today, but similar situation. We had 170 puts on through this time frame just to have some protection there to hold profits if it decided to fall. It had gotten so high it made sense. Take some of our premium left and see if we can give it a day to see where it goes, and if we have to roll those higher, add some new puts at a higher strike price. I was willing to take that risk slash opportunity. And then Baidu has been going up for a few days. We had rolled puts up from, I think, 93 up to 100 when it broke that level, and then just continued to shoot up. It's kind of small now, but these are big numbers. So I got some of our remaining premium back for those to see it have a bit of a run. Kind of nice to see Baidu have this sort of run, even in spite of bad news with China and all of their their strict lockdowns and their um, protests and whatnot, civil unrest. But Baidu is still making money in spite of all that, so kind of nice to see the market agree with me on that and push Baidu up. So those are what we got off, and I kept on. For the banks, kept on the protection for banks, Disney, Ford, what else? Visa. And if you look at some of these charts today, I think that was a good idea. Had 38 puts up here on Bank of America. It's looking great today. JP Morgan. Oh my goodness. Let me try that again. There we go. Not taking quite the turn that Bank of America is, but it's been overbought for a little while. And my worry with the banks was that it would be perceived negatively if rate hikes are going to slow down. So I was willing to wait a day to see what the reaction is more with banks, and I'm glad I did. So it's not exactly continuing up nicely for the banks. So glad I have protection on our banks. Visa, I could have taken protection off, but man, this 215 has been 215.16 has been quite a resistance level, and I wanted to keep my 210 protection on if it had some sell orders stacked up there. Looks like it's holding up nicely right now. So my plan with most of these is to look at the end of the day and see where we're at. Baidu was down earlier this morning. It's now positive, so that looks good. Visa, I just kind of want to see it hold up. And the other one was Disney. Disney, again, coming up to a resistance level. I didn't feel as though it had the same boost as the tech stocks like Apple, Baidu, and Meta. And so I opted to stay because it just got up right up to that 98 up by the 50-day, and we had 98 puts. And you can see it's still struggling to try and get over that today and hasn't done it. So keeping those on for now. So that has been pretty much all of the things I've done and worked on for the big reaction yesterday. Can I answer some of your questions? Keith, why did you do that? I kind of explained a lot of why, but what questions do you have? Oh, I missed Ford. Ford has been around 14, jumped up above today, but has been following this 200-day moving average, struggling to stay over it. Couldn't get over it yesterday. even with the big jump. So I'm likely going to leave those alone, especially as this kind of looks like a doji, which tends to be a reversal. So I would assume if it can't get up higher by the end of the day today, it wouldn't make sense to be taking 14 strike puts off of Ford if it on the idea that it will probably come back down tomorrow. William asked, Keeve, it seems like you've been a lot more trading in and out of things lately. Why is that? Well, that's true, especially with those SPY puts where we get these 2% movements on a daily basis, quite volatile. You look at the SPY chart, gives you a little better idea of where your resistance levels are for there, because it is a little bit different than the S&P chart. But I was looking at this day and these days, seeing that it couldn't even get to the 200 day, got close and fell down, kept him on, touched the 200 day and was coming down. I opted to add the SPY put, not 395 SPY puts, instead of take the 390s off. Because if it couldn't get above the 200 day, with all of the economic stuff that was coming out this week on Wednesday and tomorrow, on Friday, it just seemed more prudent to have that protection on. But obviously, what changed? We had the Fed come out, say some things that made the market buy into it. So it would be foolish not to play that direction, if for no other reason than getting some premium back from our puts to protect at a higher price if it just can't sustain a run. But that is one of the big things we were looking for. Fed thinking that they'll start to slow down rates. What that means is instead of 75 basis points, they may do 50 basis points. That's basis points are fractions of a percent. So 50 basis points is 0.5%. 75 is 0.75%. They've been in the past lately doing 75 basis points. And so we had mentioned, in fact, I had mentioned Monday, if it looks like the Fed might do a 50 basis point in December instead of 75, that might be enough to send us into a Christmas rally. Right now, all we have is a maybe. And we have to know for sure, we'll find out for sure rather in a couple weeks when the Fed has their rate meeting. But I wouldn't be surprised if we have a run up into that meeting unless reality sits on the market, hits the market, and people realize that they still may stick with a high overall high rate interest rates with the Fed for a longer period of time. But right now, the market is seeing it optimistic as the Fed is choosing to, what it looks like, slow down rate hikes. So we will see. One thing I'd think about is looking at some SPY calls, but I kind of wanted to see I wanted to see a little more, I wanted to see the market to continue up, and today it's kind of looks like a profit taking day, and I think people are still worried about, excuse me, our job openings numbers, or what is it? Let me see. Our numbers tomorrow, Friday, December 2nd, unemployment rate, payrolls. That's going to be our next thing. If we get so it kind of depends. If we get a really high unemployment rate, or at least a big jump in unemployment, that might worry the market, feeling like we won't get that soft landing idea that we talked about, feeling like we're headed to a bigger recession in terms of people's jobs, layoffs, and that kind of thing, and that the market, or excuse me, that the Fed overshot their rate hikes, were too aggressive, putting us into a recession. So if we get larger numbers than expected on our unemployment rate, that's something that might worry the market. But if we just get a little bit higher unemployment rate, then the market might see that as more positive, because that's what the Fed is looking to do. They're looking to slow the economy down a bit. They're looking to slow down inflation. A little bit less job hiring means a little bit less inflation, that sort of thing. So that'll be important to see, and I think I'll wait for any bullish type of a SPY call type thing, most likely tomorrow, and seeing what the market reacts to with those numbers Friday. And depending on that, I think we could get a bit of a rally into the next few weeks with before the Fed meeting, as the market's obviously expecting this sort of thing instead of 75 basis points. Didn't see a catalyst a few weeks ago, but that sort of has changed with what happened yesterday. could see the market continue up for a couple weeks before the rate meeting. And we'll have a Santa Claus rally, Christmas rally, whatever you want to call it. I think it's like the 14th or 15th or something's usually around there, but it's Wednesday in a couple weeks. Let me see, what is that? Yeah, so it's like the 13th, 14th. What are we looking to do? Kind of already said that. Guys, is there any other questions? Yeah, we have kind of had to be more nimble, getting protection on, taking it off, just because things are moving so much. But that has also been at times a really helpful thing. You know, we made some money on these dips, here and there. Stocks, much easier individually to look at puts for stocks as protection rather than just trying to outguess the market. Stocks have a little more, it's a little easier to understand what stocks are doing individually, why they're moving the way they do, than it is to understand the market as a whole, with different cross currents, different stocks, hundreds and thousands of stocks moving one way or the other. But when we're in a bear market still, it has been nice to be able to have that extra little bit of protection with the SPY puts when it is all starting to get dragged down together. Guys, any other questions? Not seeing any questions come in. So I think that does it for me. We'll get this posted. And Kevin should be back Monday, I think, for his market commentary. So I will join you guys in listening to him then. All right, guys, take it easy. Thanks for joining me. Have a good Friday tomorrow, good weekend, and yeah, be safe, be careful, make prudent decisions, remember who you are, and all of those good things. No problem, Jeff. Thanks, guys. We'll talk to you later. Bye.